Hey, I'm Chris Miglino. I am at the world-famous LD Micro Conference in Los Angeles, California. I am here with Barry Sloane from NewtekOne, trades on the NASDAQ under NEWT. How you doing, Barry? Good to see you.
Chris, thanks for having me. Great to be here.
Yeah, good to see you. So tell us a little bit about what's going on with the business. I know, you guys have been at this for a long time. The stock's been doing really well. And you guys have, had a long history of doing the right thing in business.
Appreciate that. So, Chris, the company was founded in '98 out of a spare bedroom in a New York City apartment. And the business model from '98 is the same as it is today. We provide financial and business solutions to small and medium-sized businesses, small and medium-sized enterprises, and what I refer to as independent business owners. The SBA defines that demographic as 50% of non-farm GDP. 9 out of 10 businesses in the United States are defined as SMBs, and it represents 65% of job growth. So this market is an economic powerhouse. And NewtekOne is an ecosystem that does many things to make the business owner more successful. We now own a bank, so we take deposits. We're the largest SBA government-guaranteed lender in the United States by loan volume. We manage businesses' IT in 2 data centers. We help them process payments electronically. We insure them 50 state licenses, life, accident, health, property, casualty, and do payroll, health, and benefits. So we make our customers more successful and better. That's the mission statement.
So it's a vertically integrated business. You bring in a customer and you have lots of different stuff to sell them.
Correct.
But it starts off, what's the entry point? Where do most people come in?
Well, it's a good question because we don't have branches. There's no bankers. There's no brokers. There's no BDOs. So the entry point are alliance partners like Ameineke Muffley Trade Association, True Value, Randolph Brooks Credit Union, Morgan Stanley, UBS, all organizations that do not have the solutions for independent business owners. They drive them to us through a referral system that we created over 20 years ago.
Interesting.
We get 600 to 900 business referrals a day.
And they can't service those accounts. They don't have the infrastructure or the products to service those businesses.
No, they do other things with the client. They manage their wealth. It's a trade association, so they help them with state-of-the-art issues within the industry. But if they want a business loan, they don't do it. Depository services, they don't do it. Workman's comp, health insurance, payroll, managing, they don't do any of that. They drive them to us for the help. We don't take the customer. If they're doing things, we don't take the wealth. We don't take the deposits if there's a conflict. But we manage the relationship and make the business better.
And then, so you said one thing that's interesting that seems a little bit outside of the whole financial ecosystem is managing their IT and that piece of it. How did that come into the equation?
Well, we, in 2004, acquired a company called Crystal Tech Web Hosting. And in 2004, the big thing was developing websites and e-commerce. In 2004, people thought e-commerce might be a big deal. Obviously, look at it. It's huge. So we acquired an entity that hosted websites. But what we really did in that activity is in the data center, we managed hardware and software. So that's morphed into cybersecurity and cloud infrastructure. As a matter of fact, that entity, Newtek Technology Solutions, one of our subsidiaries, we're merging into a public company and a spinoff.
Interesting.
And the company's called PalTalk, stock symbol PLT. It's something people should take a look at. But what we do for a doctor, dentist, lawyer, motel.
It's going to be a dividend out to the shareholders?
No, we're actually, it's a good question. That was a choice. We're going to get shares, public back. We're going to hold them at Newtek, and we're going to get cash. 4 million shares, $4 million. It has a value of around, well, the shares have been very volatile. It's been trading between $2 to $6. So you can take a look at it, do your own analysis. But we'll have a value on those shares.
Okay. So you'll own the whole thing, and then you guys determine how to get out of it.
We're going to own 30% of the total float for our contribution of NTS.
Got it, yeah. And then you'll raise additional money into there.
That company probably will raise additional money, yes.
Okay. Now, you guys, if I remember correctly, you guys were an investment act company, right? So you're kind of a little different. You need to distribute all your profits on a quarterly basis. How does it work?
So in 2000, myself and the other founders merged into a public shell. Then we were a 1933 Act company up until November of 2014. Then we elected to become a business development corp, which is a 40s Act company. Very few people have done that. Matter of fact, I don't know anybody that actually has done it. So that made us distribute 90 to 100% of our income, and we didn't pay tax. It was a flow-through. When we bought the bank, we then had to merge out of that structure.
Okay.
So we're no longer a 40s Act company. We're back into 33. So not only has, to my knowledge, anybody gone into a 40s Act, but nobody has actually gone out of it that didn't have a bankruptcy.
So what does that mean for distributions to the shareholders? Like, is there still dividend distributions then?
Yeah, we pay a very healthy dividend. It's about 76 cents a share annually, about 19 cents a quarter, and that's a preferred dividend. It's much less than the BDC, but that was flow through. So our dividend is tax advantage, and the reason for doing it, look, I'm a fairly large shareholder myself. So theoretically, I penalized myself in the dividend cut. But then we believe for all the shareholders, the total return of where we're going, owning a bank, and I want to explain why owning a bank is valuable versus what 98% of the other banks do. We do it differently. We believe it's going to, despite the fact that there was a dividend cut, which caused a huge transformation in the shareholder base. So you had dividend investors, a lot of retail that love the big dividend. Now it's less of a dividend, and there's more of a capital gains play. However, we're trading 5.5 to 6 times earnings, and it's growing. Somebody could question whether that's a good multiple or not. I'll leave that to the investor group. But selfishly, I've been a big insider buyer. You could check my purchases. I was a big dividend player, so I obviously believe long-term in building the business, it's going to work out well.
So let's talk about the financials year over year. So in 20, where'd you end of the year in 23?
23, we ended the year after a big tax benefit of about, I think it's $1.05 earnings per share. The tax benefit bumped it up by 70 basis points. I'm taking that out. This year, we're $1.95 midpoint.
Okay.
And we're in pretty good shape. Our earnings are November the 6th. Please stay tuned. The investor relations section of our website has analyst day information, investor calls. We have 6 equity analysts that follow the stock.
How are the first 6 months of this year versus the 6 months of last year? Because you have this new bank and everything in that.
Oh, we're up double digit.
Okay.
We're up double digit in everything. If you look at loan growth, deposit growth, earnings, we are a double digit grower.
And if you look at all of these different business segments that you have, is there one that's standing out that's doing the best?
I think the bank obviously is a focal point, but I think it's very important to note a typical bank has 90 to 95% of its income as interest income or margin. We're the opposite. We got 65 to 70% of our income as non-interest income. That's because we're very return on assets and return on equity based. Our return on tangible common equity at the bank in the last quarter was in excess of 45%. Our return on average assets at the bank was 6%. Those metrics for a bank on assets, 1 to 1.25 would be outstanding. And on equity, 12 to maybe JP Morgan at times is high teens, low 20s. So we have metrics right now the market is getting used to, saying, how are they doing it? You've got to understand, and it's complicated, I'm not going to sugarcoat it, what's going on inside the organization. Because we have so many different businesses and diverse revenue streams, it takes time to get comfortable and figure out what we're doing in a banking context. The important part, if you look at the average bank banking this segment, they take their deposits, and if the customer is lucky, they get a loan. That's it. And they typically pay 10 to 20 basis points on the deposits. First of all, we pay 1% on checking, 3.5% on savings, and there's a true zero fee account. No ACH fees, no wire fees, no monthly charges. 0 fee, trusted. Go to the website. We have a calculator to show you the savings. That's on the deposit side. On the lending side, we think, state-of-the-art loans, because our loans are principal repayment 10 to 25 years.
And are those SBA loans mostly?
Some of them are SBA, and at the holding company, we do loans up to $15 million that are non-SBA, and we put those in securitizations. So our flagship loan has a lower payment than a typical bank loan because banks are amortizing the principal over 3 to 5 years. We amortize the principal over 10 to 25 years. So even though we're charging a healthier rate, the payment is lower. What we get from our borrowers are personal guarantees. I'll take a personal guarantee, joint and several, which we chase, and we lean personal assets over a short AM and a loan package with covenants. So we think, the best depository, the best loan products. When you are a client and you go to the NewTek Advantage, which is the business portal, you get free unlimited document storage. You get free unlimited web traffic analytics. You could make payroll from the portal. You could see your merchant processing data right in the portal.
All this is in one portal.
One spot.
Included with the bank.
Included with the bank. Okay. And we're about to get QuickBooks pushed into the portal too. So a business owner gets their accounting information. They could see their deposits. They could see their invoices, the money coming back. They could see their bill pay. They could see their merchant activity from that day, chargebacks, refunds, batches. They can make payroll.
So that becomes your salesperson.
There you go.
It's all right built into the system.
No one's got this.
Right. Interesting. I love integrated vertical models. It's if you can not get distracted by too much and you have the flow that can go all the way through, I think it's a fantastic model.
The business owner doesn't have to go to 3, 4, 5 systems. It's all in one place.
Right.
And it's all about convenience. When you think about 2 great brands, Apple, let's say the Four Seasons. Why is Apple great? Well, you get the phone, comes out of the box, you don't have to read an instruction manual and it does everything for you. Then you go to the Four Seasons and 15 people are coming up to you. How is everything? If you're at lunch, you got 3 or 4 people that say, how are you doing? How's your food? Can I do anything for you? That's where we're going. We already have a lot of that in place, but it's only going to get better.
All right, so if you want a MacBook at the Four Seasons, this is a stock to go to. What should it, you have earnings, you said, coming out on...
No, 6.
Okay, so it's coming soon.
Yep.
You're busy. You got next week, you're getting out there.
Yep.
So, well, I wish you the best of luck. Thanks for taking the time with us.
I really appreciate it.
Yeah, thank you very much.
Thanks for having me.
Good to see you. Thank you very much. And make sure that you check out the stock NEWT on the NASDAQ. Thank you very much. Rick.